My husband Matt is a travel CRNA, and our family goes with him. Before this, he was working as an employee for an anesthesia company. To see if you want to listen to how we got started as a travel CRNA family, here's what our financial picture was over the past several years. I've been a homemaker since 2013, and I homeschool our kids. Matt graduated anesthesia school in December of 2015 with $80,000 in student loans from the program. In 2020, we got serious about paying off his student loans. In February 2022, he began his career as a travel CRNA. At that time, our mortgage balance was about $78,000, and we still owed $29,000 for his anesthesia school student loans. In March 2022, we paid off the remainder of his student loans. In March 2023, we purchased a newer SUV for $26,000 cash. In May of 2023, we paid off the remainder of our mortgage. After we paid off our consumer debt, Matt set up a Roth 401k so that we could have a great way to save for retirement. As a travel CRNA, Matt made significantly more money than he did as a staff CRNA. So that allowed us to pay off debt much quicker than if he had stayed W-2. And we've also been able to see the country at the same time. When we thought we were ready for Matt to transition to a travel CRNA career, we chose to keep things simple. We set up a solo LLC for the business and chose to not be taxed as an S-Corp. I may go into detail as to why we chose to not be taxed as an S-Corp in another video, as there are several reasons. As a side note, my degree is in business administration. I can easily run the admin side of the business, including creating invoices, filing estimated taxes, and reviewing and editing contracts. I'm pretty good about finding answers myself when there's a potential issue. I do, however, consult with an accountant that specializes in travel nursing when I do have tax questions that I can't conclusively find the answer by myself. On another note, one of the first things we did to prepare for self-employment was to save up the amount of money we would normally use in a month. For this hypothetical example, if we normally would have $10,000 as our monthly household budget, then that would be the amount we would save up so that we would have the full amount of money needed for the budget at the beginning of the month. A big advantage to already having all the money needed at the beginning of the month is if my husband's company is paid late, it's not going to put any strain on us while the issue is sorted. Recently, an invoice did actually get overlooked by a client, and we ended up getting paid a little bit later than usual. Again, it wasn't a huge deal because we already had the money we needed for the current month that we are in. Another reason we chose to have the money for our household budget a month ahead of time is because of the payment schedule. It's different with each contract. The contracts that were direct with other anesthesia companies have been either paid bi-weekly or monthly. The one contract he had with an agency, he was paid weekly. Furthermore, after beginning a new contract, the first payment can be anywhere from 2 weeks to over a month later, depending on the contract terms. So we want to have money readily available for our household while we're waiting payments. Now I'm going to show you our business startup costs. The bulk of the startup costs were for malpractice and state licenses. We also had the first month's rent, the cost of the LLC and foreign LLC, and registered agent, as well as QuickBooks Online. The monthly QuickBooks charge was discounted to $14.50. Currently, we pay $30 a month. And our business bank account is linked to QuickBooks for easier record keeping. The malpractice amount required at the first facility in East Texas was a $1 million, $3 million policy, and we chose an occurrence policy. Just as a side note, the $1 million is the max that would be paid out for an individual claim, and the $3 million amount is the max amount that the policy would pay out annually. This has been the highest priced area for malpractice so far for us, and this amount is per year. My husband was required to have the same amount of insurance for a facility in Mississippi, and it was about 60% of the cost that it was there in Texas. When he does change practice location, the malpractice does change, and he is either refunded the difference or he pays a higher amount depending on the policy price for that particular location. My husband did not need a DEA number for the first contract, as he was allowed to use the facility DEA number. But he did need his own personal DEA number for the second contract, and that was a large expense. So I wanted to show you what the amount is for the initial DEA license in case you need to get one when you start out. And as you can see, every 3 years we have to pay that amount in order to renew the DEA registration. Now, Matt did end up getting reimbursed for the initial DEA expense and some of the state licenses. And some places do reimburse you for malpractice or provide it, but not all places. Lastly, I will add, I didn't know about the housing request option on furnished finders. If I had used that platform for locating housing, our housing expenses would have been much less than the $4,400 we paid for the first month renting through VRBO, or as they say on the commercials, Verbo. However, we were giving a housing stipend that did actually cover most of that expense. Switching gears here. When the business receives payments from either an agency or an anesthesia group, the money goes directly into the business account. Here's my process once the payment has cleared. I have a Google spreadsheet where I input the full invoice amount, less any expenses such as mileage reimbursement, housing, etc., and that gives me the taxable amount. Then that amount is multiplied by the federal tax percentage and any applicable state tax percentages. I subtract the estimated taxes from the taxable amount to get the owner draw. I pull out the federal and state estimated tax amounts. They're placed into a separate personal bank account so that I can pay the quarterly estimated taxes when the time comes. Place notes on the transfers. For example, for federal estimated taxes, it would say the invoice number, Q1, federal estimated tax. And another example would be invoice number Q1, Iowa estimated tax. That just helps me to keep things in order. If I do have a question later about what a specific transfer was from, I can look at the notes and quickly see what it was for. So next up, I do the owner draw, and I just place the invoice number and owner draw on the notes for that transfer. I also always keep mileage maps and receipts for business expenses in case of an IRS audit, and that also allows me to easily submit my expense information into the tax portal that's used by the accounting firm who files our yearly tax returns. If you're new to being a business owner, you should discuss how you should handle your taxes with your accountant. I'm just telling you how I do it for our business. Another thing to keep in mind is time off work. As a W-2 CRNA, Matt had between 7 to 9 weeks paid time off per year. As an independent contractor, there is no paid time off, so we save up extra when he plans to be off work. In 2022, he took off 7 weeks. 2023, he took off 14 weeks. And by this year's end, he will have taken off 18 weeks. And he still will have made more than what he earned as a W-2 CRNA. Going on with our example of having a $10,000 budget, we would save up in advance $2,500 per week that he plans to be off work. Lastly, I will add that we use the free version of the Every Dollar app for our budget. Both myself and my husband have the app on our phones, and we log each purchase when we make it. Budgeting with that app has really helped us achieve our financial goals. So in closing, if you have any questions about getting started up as a travel CRNA, I would love to see them in the comments so I can either respond right then or potentially make another video to address anything that I left out. If you did enjoy this video, if you thought it was informative, please like and subscribe to see upcoming videos